dynamic and fast-paced world we live in today, more service providers are giving their clients and the public new flexible and friendly methods of payments so as to ease the burden of lump sum payments. Now, this not only enables clients and the general public enjoy stress-free payments, but helps more people plan for other activities that ensure the advancement of their lives. To give us more highlights on this, we have in studio Harun Mwirigi, the General Manager for Resolution Credit Limited. Thank you so much for joining us this afternoon.
Thank you very much.
All right. Now, credit facility may sound a bit complicated to many, so probably we can start from there. What is credit facility? How does it work? And, you know, what's its major role?
Thank you very much, Wanjiru Maina, for this chance and opportunity. Credit facility, when you look at credit facility, especially from an insurance perspective, you need to understand that if you look at the insurance industry in Kenya, we use from a regulatory perspective what we call the cash and carry. So it means that for you to be able to enjoy the credit facility, the insurance facility, you are supposed to pay in cash. Now, it's not many people who are able to do that. So that is how the credit facility comes in, so that you are able to finance the people who are in need of insurance for purposes of, them being able to pay the premiums that they are supposed to pay. Yeah.
And, now that you mentioned that it has to be in cash form, that means, most people are limited or get limited to using that. And, many a times these credit facilities has been linked to or has been preserved for the rich. But with the high rate of unemployment that we have in Kenya right now, many youth are, want to start their own businesses. And it hasn't been easy for them as different organizations, probably look at different criteria. Can this person probably afford the amount of cash that the lender probably, the amount of cash that he expects to get and probably is expected to return. So what are some of the hindrances, maybe other hindrances that affect this factor of borrowing cash?
It's indeed true that credit facilities in Kenya has not been very easy, and especially with the rate capping, because when the rates were capped, the financial institutions have actually found it much more risk to lend to the common mwananchi, and they have opted to go to other less risky form of lending. So that largely leaves the common mwananchi exposed. And that's why there is actually need to come up with alternative forms of financing that do not necessarily even require a lot of the stringent credit requirements that are required, especially from a credit perspective. So if you look at what we have, especially from an insurance perspective, you got to think of what is that facility that you can give to the masses that doesn't have as much stringent requirements. One of the challenges that we have in as far as credit is concerned is the element of collateral or security. Now, like you have rightly said, a lot of the young people, they do not have the title deeds, they do not have the logbooks that they can use to be able to secure the credit facilities. And that is why credit from an insurance perspective becomes very critical, because you have a scenario whereby you do not even have to have something tangible for you to be able to offer for purposes of securing your facility. And that's where we come in. Yeah.
Now, when taking this credit, there are qualities, maybe the banks or the institutions that lend money probably look at. Maybe you can take us through some of the criteria and what are the benefits for this? What benefit do you get from borrowing money?
If you look at it, every person who is doing lending, even from a financial perspective, they're actually giving their money to you for purposes of a consideration that comes back. So part of the considerations that they take into praise is they look at the profile of this customer. They profile this customer and they are asking themselves, does this customer have what we call the repayment ability? Now, the repayment ability sometimes can be very subjective because this is a scenario whereby you are looking at what are you able to offer, you know, for purposes of securing your loan. This is a scenario where you are asking yourself, if I look at your statement, for example, you know, if I look at your statement, what kind of cash flows am I seeing? What kind of cash flows do you keep on bringing in? And again, these days we're even looking at the credit leverage bureau. So we are looking at your credit history and asking ourselves, what is the risk profile for this customer? So you find that in a way may disadvantage a lot of people.
Sure.
And especially from a late capping perspective, that's why even financial institutions have found it very challenging. Because you look at the risk that I'm taking when I'm giving someone a loan, as opposed to the other investment alternatives that I'm having. And if the return is going to be good, for example, when I invest in other alternatives like treasury bills and bonds, then you find that it becomes a little bit challenging for credit to be extended to the people who do not have a very good risk profile. Yeah.
So does it mean that the youth out there do not have enough collateral?
Indeed, if you look at the youth outside there, and if you look at the collateral from the perspective of even the financial institutions, what is it that we consider to be collateral? You know, is what you are saying maybe largely a title deed. We're looking at, something like a logbook. You're looking at maybe investments that can be pledged to the financial institution. How many youths are able to do that? You know? So you actually find that the youth becomes largely disadvantaged. And that is the same reason when you look at it from even an insurance perspective, you'll actually find that we have a very big challenge in as far as the penetration rate of insurance in Kenya is concerned. And not only in Kenya, actually, even in the entire Africa. In the East African region, we are more disadvantaged. But if you look at it entirely across the globe, it's only a penetration rate of about 6%. Kenya, we are at less than 3%. So really, within the East African region, we are the ones who are ahead. But there is actually a challenge.
So there's that challenge in the developing countries mostly. But who is in a bigger position to get this credit facility? I hear most of the, I think if you're married, then you're in a higher position to get a credit facility.
It's basically, again, from the way you profile a customer. When you profile a customer and someone looks like they are married, it's an indication maybe they are much more stable, you know. They are people who are able to take responsibilities. So it is actually from that perspective, you know, just like it is sometimes said that women are better payers, you know, as opposed to men. And there's always a whole discussion about that. But sometimes there's a bit of truth in this. So when you are looking at the character,
truth, I believe.
Actually, there's some truth. This is a point that can actually be discussed. But there is a bit of truth in this. But one of the things that we consider even from a lending perspective, it's what we call character.
Yeah.
So someone who is married is someone who one can argue is more organized, is able to take more responsibilities. So you can actually profile that person as someone who can be considered a better payer. Yeah.
All right. Now, is there a minimum insurance cover sum that one must have for you to be considered to receive credit, these credit options?
This is actually dependent on different people who offer the insurance financing facilities. If we can delve a bit into insurance financing. Because you'll find there may not be a lot of players offering this, but you'll find different institutions have different ways of doing it. So there are institutions who say this is a minimum, but for us, for example, where I am at Resolution Credit, we have no minimum. We actually always say if it can be insured, it can be financed. Yes.
And maybe in an insurance point of view, maybe you can share with us factors that one should consider before going for that credit facility. You know, just like shopping, you have to move from one shop to another because at the end of the day, it may save you a lot of maybe money.
Exactly. It's important to appreciate that when you're looking at financing from a credit, from an insurance perspective, one of the advantages, and this is why this is something that can be captured by everyone, even the youth included, is that from an insurance perspective, the facility that we give, we call it insurance premium financing. This facility does not require any collateral. And that is a big advantage for everyone, including the youths, because the only thing that you need to do is to actually determine that you are in a position to make monthly repayments. Remember what I said earlier, that from an insurance perspective, you are supposed to do cash and carry. But when you come to credit from an IPF perspective, insurance premium financing, we give you flexibility in as far as the payment is concerned, and in return, you do not give any collateral. It's very simple. You actually come and say, you have a quotation for insurance that is maybe, for argument's sake, 100,000. So we will just ask you to give us post-dated checks for a maximum of 10 months. And that is it. And once you are done with the insurance, your cover takes place immediately. So the most important thing that you may need to ask yourself is, what is my level of disposable income? Am I able to meet these installments on a monthly basis? Because that is what is important. If you're able to meet the installment on a monthly basis, you are good to go. You actually are very well covered. Yes.
And maybe in the same line, we can talk about the flops that people make, bad decisions or mistakes they make when taking these credit facilities, and what's your advice to them?
Okay. One of the challenges that I would say I've actually seen, it's basically what I have touched on, the element of what is my level of disposable income. Because remember what I said, that what you give are maybe post-dated checks or what you call direct debits. So you've got to be very careful to ensure that your level of income is going to sustain these checks for the period that you have taken the credit facility. If it is 4 months, if it's 6 months, or even 10 months, because we have in some cases, rare instances of someone not being able to honor, their payment at some point. And in the event that you are not able to honor your payment at that point, then we are saying you're running the risk of having your cover being suspended, which means that you'll not be having a cover at that point. So it's very, very important to ask yourself, what is my level of disposable income? What is it that I can be able to afford to pay on a monthly basis for the length of period that I'm taking this facility?
To avoid the penalties. Now, there has been an issue of increased rise in interest rates, as you mentioned, etc. But, borrowing sometimes is inevitable. You need the money, and sometimes you just have to go for it. But what new alternative credit sources are you bringing in 2019?
Like you have correctly said, borrowing sometimes actually can be considered as a necessary evil. But the most important thing, the most important question you need to ask yourself, why is it that I'm borrowing? The mistake that a lot of people do is to borrow for what we call consumption loans. Because if you're borrowing for consumption, then that becomes a big challenge. That money is not likely to help you. But going forward, in as far as 2019 is concerned, we're actually looking at expanding our clientele in as far as, financing from an insurance perspective is concerned. Remember what I said, that the insurance penetration in Kenya is very low. And you go to ask yourself, what is that one or two things that can actually pull you down from a position where you are thinking today you are very strong, financially stable, and then something happens. Things like diseases, accidents. So when you have that covered, and the insurance premium financing helps you to pay, it makes a lot of difference. So what we are doing and focusing on in 2019 going forward is to increase our reach, in as far as the people who can access this form of credit is concerned, and do it in a responsible way, as opposed to, situations whereby people seem to be focusing a lot on consumption loans. Yes.
All right. Thank you so much. That's all the time we had for this afternoon. That has been Haron Mwirigi, the General Manager for Resolution Credit Limited, just giving us insights on new solutions for the public on matters credit facilities that are more flexible and friendly. I hope you got something from that. Thank you so much for watching Business Insight. My name is Wanjiro Maina. Have yourself a lovely afternoon.